You probably didn't hear about it on the mainstream financial media. Nobody was tweeting this piece of truth, this smack of reality. But a wake-up call is needed for people to understand exactly why something happens. We must acknowledge exactly why something happens, understand the origin, and piece together all of the data. Without it, we are simply hoping everything will be okay. You came here for the truth, so let me unveil that for you. Today we're going to look at why the stock market went higher in January. It's important because what we saw from October to December completely changed after Christmas and into January. Why that was, I'm going to explain it to you today, so stay tuned for a jam-packed episode. There has been a direct correlation between the central bank assets and the global stock market. I have been documenting this for years now, and you can see that this has diverged in 2018. We have seen a big change in between the central bank balance sheet, and the only thing that was keeping these diverge was the FANG stocks. This changed in October. As of October, the global stock market began to converge with the global central bank balance sheet. Everything changed as of October. Most people are unaware of all of this, but this is where we are at, and we could see it documented right here. A picture is worth 1,000 words. The one thing that changed at the end of 2018 was that the global central bank balance sheet went higher. And you can see how they are directly correlated right here in this portion. As of the end of 2018, the global stock markets began to rise, in particular the US markets. And that's not a coincidence what we are seeing here. All throughout 2018, we had a big problem, and that was not enough money being printed and put into the equities. Of course, they can't necessarily choose where it goes, but that seems to be the path of least resistance right now. So that's where it was going all the way up until the end of January. It looked amazing. And then something happened, and you could see right around this point earlier in 2018, this all changed. We saw the global central bank balance sheet start to fall, and then other markets around the world began to fall as well. And I started pointing to that correlation, particularly with emerging markets. Things started to change. But we had the FANG stocks after the initial dip that happened in the end of January, beginning of February 2018. We had this run up in FANG stocks. And so everybody piled into this trade, and it was becoming the #1 overcrowded trade for 2018. And then October happened, and we saw the result of not playing it smart, and the stock market tanked. All right, many stocks were down 30+%, well into a bear market, and you saw the result of that on people's portfolios, their balance sheets. They started to hurt big time. Now, the thing that was not covered by the mainstream media was the fact that the central bank balance sheet is what is really controlling the markets today. Perhaps they are becoming ignorant intentionally, but regardless, that information is not known. The public gets their information from these mainstream sources, one or another, doesn't really matter who, and of course they're not going to point to this piece of data. This has changed everything. This explains exactly why the markets have come up higher. You can see it for yourself right here, documented for you all to see. So let's move on. Another great chart showing the S&P 500 from the beginning of 2016 up until present day, and then at the bottom we're seeing the central bank balance sheet month over month. So obviously throughout 2018 you can see that this was basically all in the negative during this period, and just at the end of 2019 it starts to increase, and we see those changes move into the positive, and it was very clear. Right here we saw stocks going higher. They haven't reached where they were before at their peak. That's fine. Some stocks have escalated quite a bit here since the end of December, but in general, the market itself is still down. But we have seen the amount of money that has been rushing into the system, central banks leading the charge. If you want to go back historically from 2016 and on, you could see how this correlates. I just want to show you the fact that this happens every single time. The central banks inject money, the algorithms chase it, the institutional investors, and then the retail investors behind. And this happens over and over and over again. All throughout 2018, we saw something very clear. Central bank balance sheet was declining by about $1 trillion, the last numbers I have, approximately $1 trillion, and you saw the stock market go into the red for the year. Cash was one of the only asset classes that remained in the positive for the year, US dollars that is. So let me give you some more truth. When you break it down even further, you start to see which central banks are doing what. At the end of 2018, the ECB is not going to print any more money. Wait a minute, what's happening here? The ECB balance sheet has increased in this period of time. They haven't stopped printing. They said they would stop printing, but they never stopped. The BOJ, they started to decrease the amount of money that they had out there, and then they decided that it would be right to print some more money. So the Federal Reserve is the only one right now that is decreasing their balance sheet, and they're doing it at the absolute slowest rate. So this is obviously in response to what has happened with equities. They are reacting accordingly. The Federal Reserve is going according to plan. However, the other central banks seem to want to prop it up. So they are really diverging right now. We'll see if this becomes a trend or if it's just short term. But since this point in December, exactly matching up to what we saw, it happens to correlate entirely. And this is massive news, massive news. So I just wanted to bring it to you. I think it's been very important to really check along with this, to keep updated with it, because it's always changing and we could see how the markets have been. Of course, we don't get the information day to day, but when we do, we can look back and say that is a complete and direct correlation between this set of data and that set of data. But if you look out there, most individuals, they just want the answers. What do I buy? What does this guy tell me to buy? That asset? That stock? Okay, I'll do that. Oh, I trust that guy? Okay, I'll just buy what he says. That's not the way you do this. People that are subscribed to this channel want the information because they're going to piece it together themselves. We are looking at the ECB's balance sheet. This is measured in euros, and you could see that it has accelerated over the years. Now I can zoom in. This is showing us basically from the beginning of the euro itself, but when you look in closer, we can get the data all the way up until this point here, just showing you it hasn't stopped growing. Now maybe it's slower than where it was a little while back, but we are talking about 4.6 trillion euros on their balance sheet. They had exceeded where the Federal Reserve was. They continue to grow this balance sheet. Now perhaps this is just some mild changes in the balance sheet here just in the beginning of the year, and that will stop in the coming days. But as of right now, it's growing further and further. They haven't stopped this, and I just want to see where they take it. Okay, this is the newest numbers that I could find here, but I want to show you the most recent data at all times. It says that it's been updated as of January 9th, so at least that's where we're at right now. All I know is that they will not stop. Of course, the only reason why they will stop, why 2018 looked so bad, is if they are ready to collapse the financial system. I don't know that information. I don't know when it's going to happen, but if they do, they know specifically what's going to happen. 2018 was a perfect example of that. What we're doing here is comparing the ECB's assets to the Federal Reserve's assets, and you could see the difference. Obviously, right now, we're looking at the red line, which is the Fed's assets, and they started to reduce their balance sheet. You could see it right there. And the ECB, on the other hand, has continued to increase. So that shows us the divergence in between these two central banks. Very important to chase this information at all times. But it's funny, you always have the little fish, the minnows, the retail investors believing that they are the recipients of quantitative easing, but that's not the truth. Everybody knows that. Many high-level individuals have talked about this. We've seen it time and time again. They come out and say quantitative easing is for the rich, and they're not talking about the top 5% or the top 20%. They're talking about the top 0.0001%. Those are the people that get everything. And I want to show you this. Out of Bloomberg, it's official. US banks topped $100 billion in profit in 2018. Wall Street's best year ever. The biggest US banks pulled in a record profit in 2018. So the stocks were getting punished. We saw the actual sentiment started to decline. The smart money was leaving, but they managed to make a record profit. These are basically the most corrupt institutions you could ever find. There is so much fraud and unjust behavior that takes place in all of these companies. They have the most wild collusion that's going on in between government and the corporations I've ever seen. Goldman Sachs, perfect example. They are woven and intertwined in the US government in particular like no other company. It's insane how deep these connections go, and that's just one example, one corporation. And last but not least, Big 5 US banks annual profit, you could see on the right hand side, 2018, record high, over $100 billion. This right here just tells us where the money goes. It goes to them. They can create derivatives going bigger and bigger and bigger, well beyond their assets, well beyond the country that they work in, their assets, going beyond the world's assets. It's crazy. Look at the example of Deutsche Bank. We're talking about 50 trillion euro worth of derivatives. That's bigger than Europe. How in the world are they able to accomplish this? Because of the corruption. This shouldn't be allowed. Why is a company able to create things out of thin air? That should not be allowed. Hey, if you want to do a model on the computer and create that and simulate what could happen in the event you do something like this, that's fine. That's a laboratory test type setting. But you bring this out into the environment, this starts to run amok. And the danger is everybody's pension fund, everybody's retirement account, all of the individuals who went way too far on their mortgages, they will pay the price. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you are supporting this channel. You are supporting the truth. So I do appreciate that very much. And last but not least, if you want the financial education that you are not taught in school, then these two books have everything that you need. You can check them out at the link in the description. Check out the foundation, the history, the asset classes, everything to do with making money, so much more. Check that out. If you want the audiobook, you can get that at themoneygps.com.